What's good, everybody? I'm Mo Stacks here. And today we're going to be talking about Google and Tesla earnings for quarter two that was just released this afternoon at 4 p.m. Eastern, 1 p.m. Pacific Standard Time, which is where we are. So let's just hop right into it. Okay, so if I am trying to find the earnings of a particular company, the thing that I'm going to do is type in that ticker or the name of the company and investor relations, right? Google is called Alphabet. So if you click on the Alphabet Investor Relations tab, this is what you're going to get. And so we're in quarter two. So you're going to click the earnings release link. And this is Alphabet's earnings for the second quarter of 2022, or I'm sorry, 2024, right? And so, really, what I'm looking at is two things. I'm looking for were the earnings great? Did they beat expectations? Were they so-so or were they bad? And then number two, how did the market receive that? How did the market react to the earnings? And so here, looking at Google's numbers, um, from last quarter of second quarter of 2023 to this quarter of 2024, it looks like revenues are growing. They went from 74.6 billion to 84.7 billion, right, which represents a 14% increase year over year. So it seems that Google is still growing, or Alphabet is still growing, right? And the operating income went from 21.8 billion up to 27.4 billion. And what I love is that the margins went up, right? They went up from 29% to 32%, which means that Google is keeping more of every single dollar. It's keeping 32 cents on every dollar versus 29 cents on every dollar, or $32 out of every 100 bucks rather than 29 bucks out of every 100 bucks, right? And their net income went up, which means their profit went up, right? From 18.3 billion to 23.6 billion. And their earnings per share went from 1.44 to 1.89, which was better than the expectations. And if you just want to look at Google's earnings expectations, I usually just type in Google and then I'll type in earnings, right? Oops. And you can go look at what the expectations were. Here, the earnings were expected to be $1.85, and they were $1.89. The revenue was expected to be 84.29 billion, and it came in a little bit better at 84.74 billion. So for me, just looking at the fundamentals of this company, of Google, right, it looks pretty good, right? It beat expectations. So typically, when a stock beats expectations, it will go up, but that is not always the case, right? And so if we go look specifically at the ticker, right? And you see when it reported, right? Before the news came out, it came all the way down here to $173. But then the market largely reacted good to the earnings, but now it's come back down a little bit lower than where we were. But for me, looking at the earnings, I definitely can't say this was a bad earnings report. Google didn't blow it away, but it's definitely not a bad earnings report if you beat expectations. And here, as you can see, it did, right? So if we just keep looking and to see what happened, right? So Google search, I know everyone's talking about ChatGPT is going to kill Google search. Google search, I've been hearing, is on its way out because of ChatGPT. Well, numbers don't lie, and it doesn't look that way to me. It looks like Google search is still growing its revenues. Second quarter of 23, 42.6 billion. Second quarter of 2024, 48.5 billion. YouTube ad revenue is growing from 7.6 billion to 8.6 billion. The Google network, that's dropped a little bit, right? But if you look at advertising overall, it's up. 64.6 billion from 58.1 billion. And subscriptions are up as well. Services are up by approximately 7.6 billion as well, right? Cloud revenue went from 8 billion to 10.3 billion. So cloud revenue is growing as well. So for me, in almost every single segment except the Google Network segment, which doesn't account for a ton of revenue, it seems that Google is still growing, right? And look at the cloud revenue. This is probably where it has more room to grow. It is competing with AWS and Microsoft's Azure, but the cloud revenue growing is also promising if you are a Google shareholder, right? And I always encourage people to look at the actual numbers, right? So that way, forget what everyone else is telling you. Look at the numbers to figure out if you want to invest in a stock or not, right? And then I go look at cash. Google has 27.2 billion of cash on hand, right? And that's amazing. Even the securities. So if you're looking at the marketable securities, right? That's $100.7 billion of cash or cash equivalents or marketable securities that Google has on hand, which means that it has a ton of money to invest in other companies or to acquire other companies, and it could keep growing. And even if we stay in this high interest rate environment, Google has the cash to weather that particular storm, right? So I'm looking at Google's balance sheet, looking at its revenue, and for me, I like Google as a long-term buy or to hold. And everyone who knows how I've been investing knows I'm in Google long-term leaps right now. And looking at this report, I'm inclined to hold, even if the stock is coming down just a little bit. What, $2, $2 or $3? But I don't know if it's going to tank after beating on its earnings expectations. Other than, let's say, if a Microsoft or an Apple blows it out of the water, or an Amazon, and people decide to put their cash there instead of Google. But in terms of its long-term prospects, looking at its actual earnings report, I like Google, right? And so this is how we interpret whether or not a stock not from a technical standpoint, but from a fundamental standpoint, is Google fundamentally, or is Alphabet fundamentally strong? I would say yes, it is, by just looking at its revenue. Now, conversely, let's look at Tesla. Tesla also reported earnings after the bell today. And same thing. If you want to find Tesla's earnings, type into Google Tesla and investor relations. You'll come to this investor relations page. And while their 10Q or their 10K filing isn't up yet, I believe it's a 10Q because it's a quarterly and not a yearly or annually, you can go look at their shareholder deck or their press release for some of the more important numbers that Tesla is releasing, right? So here's the financial summary. Now, here, for me, it's a stark contrast with Google. Now, I know Tesla's stock has been really hot lately, and it's been popping over the last few weeks. And anyone who's been watching me knows that I don't like Tesla's numbers. And its earnings, people expected the earnings to not be so great, but I just don't like a company whose earnings are declining. If you look at the year-over-year automotive revenues, if you believe Tesla is an automotive company or a car company, they're down 7%. If you're looking at quarter two of 2024, it had 19.8 billion in revenue, but the year before it had 21.2 billion in revenue, which looks like the company is selling less cars to me. What I do like is this energy generation and storage revenue has gone up to 3 billion, but you see that pales in comparison to the automotive revenue numbers, as well as services as well. Services and energy generation and storage revenue are up, right? You see these are growing. Energy generation and storage revenue grew by 100%. and services revenue grew by 21%. But its main source of revenue, automotive revenue or selling cars, is down, right? Um, Total revenue is up a little bit from quarter two of 23 because of these other two segments. But the primary thing that I'm looking at is the car sales, right? Let's look at other things as well. I do like that it does have 30.7 billion of cash on hand, just because of Tesla's revenue model is way better for me, at least in my opinion, than other traditional car companies, because they don't tend to build their cars until they order their cars. So, right, versus like the standard model is build a bunch of cars and then sell them on lots. Tesla is not manufacturing cars until it gets an order for them. What I'm looking for is actually their segments based upon the location of their sales, right? So if you look at the Model 3 production, right? Is this expenses, right? And deliveries, are deliveries up? It looks like Model 3 deliveries are down from last year in quarter two, right? They have 422,405 cars delivered in quarter two versus quarter two of 2023, it was 446.9 thousand, right? So I don't like that deliveries are going down as well. It looks like it's going in the wrong direction. And where else? I wanted to see if it broke down its segments in China or its sales in China. I don't even see it here unless, do they break it down somewhere? I don't see it, at least in this deck. I'm sure they're going to release their numbers and figure out whether or not their sales are declining in China or in other emerging markets, right? And that was one of the big reasons why we saw that dip with some of the news coming out of China, where we're seeing like deliveries in Europe and China going down, or increased competition from BYD in China, which is taking a lot of their market share. So that's one thing. I don't see it here. It may be in this entire report, but that's another thing that I'm looking for, is to see what their growth or what their decline looks like in some of these emerging markets, right? And then so now let's go look at Tesla's stock price and see how it reacted. Now we see Google went up. It went up to about $186 and then went down to about 177, and now it looks like it's stabilizing around 178, 179, right? Which isn't too big of a drop from its closing price. Now let's look at Tesla. Tesla reacted really bad to its earnings report, right? We didn't see any up and down. All we see right here is down, right? It closed at 246, and now looking at the bid and the ask, we're close to 229 to 230 in terms of how much it's dropped, right? So it dropped a little bit less than 20 points. So Tesla reacted a little worse to its earnings reportings versus Google, right? And so for me, I'm not going to compare the two. They're in two completely different industries, but I do like Google's earnings reports, which beat. And let's look at and see if Tesla may have actually beat its expectations. Let me see. No, it didn't. Tesla missed on its earnings per share expectations by 16.15%, right? So they expected 62 cents and it reported 52 cents, which is not great if you're a Tesla shareholder. However, its revenue did beat, right? So it expected 24.74 billion and it reported 25.5 billion. So there was a little surprise, but I would say that Tesla kind of had muted expectations. So this was a little bit of a mixed earnings report. We don't like the earnings per share number and the percentage of the surprise, but you know, it did grow its storage revenue, its energy storage revenue, and its services revenue, which led to it beating its earnings expectations. But as I've shown you, we don't like the fact that sales of the Model 3 and sales of cars in general are going down. Tesla's going to need to find some sort of other vertical, like its humanoids or whatnot, to persist at its current stock price, if you ask me. Right? So that's it for today. I just wanted to kind of do a hot live stream on these major earnings announcements because Google and Tesla are heavily weighted in a lot of these ETFs and in the indexes themselves. They make up large portions of the index, so they have a chance to move the market, right? And this is kind of the kickoff of tech earnings seasons. We had two of the magnificents reporting earnings today. And they're going to have some market impact, especially because a lot of people invest in Google and Tesla. So with that said, I will see you guys on Sunday morning at 8 a.m. on Mokama Sunday service. And that's it for Google and Tesla earnings. Please do your own research. This is for informational purposes only. Investing, trading is risky, and you should do so in conjunction with your financial advisors and in conjunction with doing your own research on these things. And I'm just trying to help you guys research these stocks that you're investing in a little bit better, and so that you have a little bit more knowledge on what's happening as it relates to the market. So with that said, peace everybody.